Today is Tuesday, December 1st, and this is a post-market review for the stock market activities today. Another day, another gap higher from the quote-unquote mysterious entity via passive investing. Yet, when you look at the first candle of the day for the SPY and the last one, the market pretty much did not do anything, meaning that retail is still not participating in the rally. Retail is either already all in or they're just interested in options gambling. So what happens here? Can they continue to pump overnight, creating gaps higher and flattish activities throughout the day forever? Can this pattern be sustainable without new retail entrance to the market? Keep that thought in mind because we will revisit it in the conclusion of this video. But stick around for the coverage today because I have a lot for you in the options market analysis. In the headlines of the day, we will cover all of the economic data we received today, plus the vaccine pump, the Fed's pump, the Janet Yellen pump, and here it is, the stimulus optimism pump. And I got charts for you, the usual: SPY, Qs, VIX, dollar index, TNX, TLT, gold, Apple, and Tesla. And we're gonna look at new charts for Moderna, AMAT, Trade Desk, in addition to GameStop and the biotech ETF XBI. And here we go, the Dow Industrial Average closing in the green, 185.28 points or 0.63%. The Nasdaq, the outperformer of the day, up 156.37 points or 1.28%. S&P 500 also in the green, 40.82 points or a gain of 1.13%. Which sectors led the market today? Number one, and capturing the gold by far, basic materials. We see a decline in the US dollar. Right away, materials trading higher. And at number two, financials capturing the silver. The bronze in the third place goes to energy. The laggards of the day, industrials, healthcare, and utilities. But we are not shaming anybody here because every sector managed to close in the green. What's going on in the futures market? We are seeing a little volatility starting to pick up for crude oil. The OPEC meeting took place today, but we have more meetings and talks from OPEC in the next few days. Crude oil down more than 2% for the day. What's going on with softs? Coca down, OJ down, coffee down significantly for the session. Coffee is facing significant resistance at the level of 124. And the question is it taking a break, gathering energy to give it another shot? Or are we seeing a head and shoulder topping formation in coffee? The answer will come as soon as tomorrow. Cotton, lumber, sugar, all muted for the day. What's going on in metals? They're all shining today. Gold up over 2%, silver almost 7%, platinum over 4%, copper, palladium also closing in the green. Meats, muted day, however, live cattle, feeder cattle, and lean hogs all closing in the green, about 0.5% or so. However, the weakness in grains continues. Soybean down, corn down, wheat down, but we do see canola is the only shining light in grains today, up a little over 1% or so. Moving on to the big casino, the options market, and let's see what's going on here. The Apple table was abandoned for weeks now. However, this week, the action is shifting in a big way toward the Apple table. Over 2.3 million contracts traded today. About 77% of those were calls. NIO picking up some steam here. Almost 1 million contracts for the day. About 66% of those were calls. Pfizer, number 3. Over 700,000 contracts exchanged hands today. And check out this number. About 94% of the volume was for calls. Unbelievable. However, the notable activities from today happened at the Tesla table. They're moving away from the Tesla table back to the NIO table. These are the ADHD Robinhoodians traders, and perhaps this is a signal for a top in Tesla. No more squeeze. Only about 500,000 contracts traded today. About 64.5% of those were calls. Moving on to interesting trades, and right away you see the ticker BB. This is for BlackBerry. BlackBerry caught a bit today due to the news of the collaboration with AWS from Amazon. So there is a lot of gambling here with BlackBerry, so we're gonna ignore these trades. The notable activities here is for TSM Taiwan, and they're buying the 108 calls expiring December 18th, and they are bidding over $1.5 million for this trade alone. And here is a very, very interesting one for Moderna, and I was watching this in real time at the CBOE platform. The trader sold the 175 calls early in the morning right at the top, and I believe the volume for that particular trade was 7,000 contracts, and this trader cashed about $1.5 million for this trade alone, and right away you saw Moderna sliding lower and lower, closing down over 20% from the highs of the day. Unbelievable reversal in Moderna today. I would say it is historic reversal. And you know the story. Lots of bag holders will be found in this name. Here's another interesting trade for Facebook. They're buying the 302.5 calls, expiration date this upcoming Friday, with expectation that the run in big tech will continue all the way to the end of the week, expecting a little over 5.5% gains, and they're spending a little over $500,000 for this trade. Here's another one for the KRE regional banks. They're buying the 52 calls, expiration date December 18th. Another big one, over $500,000 for this trade alone. And you saw regional banks declining over 3% yesterday. Today, they're rebounding 3% or so to the upside. And we will talk more about regional banks during the heat map analysis. Here's a notable one for NEO. And they're buying the 48 calls, expiration date next week, December 11th. And this is a big one. They're committing over $2 million for this trade alone, and perhaps we will see a reversal to the upside in NEO, even though we saw significant weakness in the name today, down over 10% for the day. Now, talk about unusual. Check out the ticker at the bottom of the table, BHVN. This is a biotech company called Biohaven, and they're buying the 70 puts, expiration date January 15th. This is a massive bid, costing the trader over $5 million on a very speculative, small biotech company. You got to be an insider here. And by the way, I placed a bid against the XBI, the biotech ETF. Today, we will talk a little more about that during the charts analysis. Continuing with interesting trades, here is another call for Moderna. They're buying the 165 expiration date by the end of this week, by Friday. Whoever sold the call makes money. Whoever bought it ends up being a bag holder. What about Space, Virgin Galactic, SPSE? They're buying the 31 calls, expiration date also this upcoming Friday, and they're committing about $250,000 for this trade. Caterpillar, they're buying the 190 calls, expiration date Christmas Eve, and they're expecting the name to climb over 10% by then. The action at the AMD table is still hot. They're buying the 104 calls, expiration date December 18th, and they're committing about $500,000 for this trade. And here is the last one for Zoom. They're buying the 450 calls, expiration date December 11th, expecting the name to rebound over 11% by then. And this is a big one. They're committing over $3 million for this trade. Zoom was down over 15% for the day. Of course, the beauty of reviewing all these trades every day is you can distinguish right away which trades are done by insiders, professional traders, and which ones are done by gamblers, the Robin Hoodiots, and the trust fund babies who are gambling in options. Moving on to the headlines that shape the day. What do we got yesterday? Vaccine Monday. In addition to more Janet Yellen optimism and more Fed's cocaine optimism. Today, we got them all again in addition to stimulus. However, we had a little bit of, shall we say, disappointing news about the vaccine. But shh, don't talk about it. Let's just brush it under the rug and pretend that we did not see this one. The vaccine czar, the corrupt vaccine czar, says that the side effects are significantly noticeable in about 10 to 15% of recipients. And when they say 10 to 15, I would up that to 15 to 20 because you cannot trust anything that comes out of the mouth of these corrupt cronies. But rest assured, I don't want to ruin your day and your vaccine optimism. Here is some cocaine optimism for you. Jerome Powell testified in Congress today, and it was gibberish, same talk over and over again. So I fired up this tweet summarizing for you ahead of time what Jerome Powell is going to say. We, the Fed, take care of the rich and big corporations, and you, the federal government, take care of the poor, middle class, and small business. This is the deal from the very beginning. The Federal Reserve will put a stop to the bleeding in the stock market, will save and inflate the assets of the wealthy. That is their mandate. That is their job. And the Fed is telling the government, don't make us look bad here. Please do some fiscal spending to help the poor, middle class, and small business. And here it is, stimulus optimism. We're starting to temper our expectations here, rolling down and down and down from 1.9 trillion to 1.2 trillion. And now we're talking about a deal for about 900 billion. And I'm assuming, of course, that there is no $1,200 checks to the people. However, it will include about 240 billion bucks in funding state and local government. And by the way, the bulk of this bill will come from some spare change that we had from the last stimulus round of about $500 billion. We have spare change for about $500 billion that we don't know what to do with. Of course, that is money printed out of thin air. Here is more stimulus optimism for you. Pelosi and Mnuchin will speak at 1 p.m. by phone today. What did they talk about? We have no clue. For all we know, they probably talked about Nancy's breakfast at IHOP. But the urgency of passing a stimulus bill could not be any clearer because by the end of the year, a lot of unemployment benefits will expire in addition to the nationwide eviction moratorium. Meaning, if you are one of those poor bum struggling Americans who couldn't afford to pay the rent, but you do have a New Year's resolution of cleaning your apartment, well, guess what? Your landlord is going to clean the apartment for you, and they are going to clean everything out, including yourself. Moving on to some of the economic data that we got today, starting with the ISM Manufacturing Index. And for this month, we have witnessed that the ISM Manufacturing Index is rolling down. Yes, it is still positive. However, it is lower than last month. And here are the exact numbers. The expected number was for 65, and last month it came out 65.5. This time around, a little short, 65.4. It is a little bit of a sign that we are witnessing a slowing down in manufacturing. We saw home sales yesterday slowing down just a little bit. Today we're seeing manufacturing slowing down a little bit. We did not get auto sales. We're perhaps going to get it tomorrow. But the picture is showing exhaustion, and without a new round of stimulus, the momentum of the recovery cannot continue. And here is more data for the holiday spending, specifically Cyber Monday. It came out as the largest e-commerce day in US history. Surprise, surprise, everybody's at home shopping online. And the number came out as 10.8 billion. However, it was lower than expected. They expected 12.7 billion. We got short about 2 billion from expectations. Now remember, this is a lump sum data that doesn't tell you who's doing the spending. Is it the rich who are not hiring their caterers this year and they have plenty of cash to go to splurge? Or is it the middle class consumer having a very healthy income and savings, and they're spending and having a good time in the economy. You're not going to know that. So we need more data. And here it is. Here is a tweet from Carl Quesadilla of CNBC, and it says that Black Friday credit card spending down 19% from 2019. There you go. Things are starting to roll down in terms of credit card spending, signaling that the consumer, the middle class consumer, the majority of consumers are not spending as expected. They're spending less because they are concerned about their financial security. And this is very important to distinguish here between the lump sum data and the reality on the ground. And what is going on with the presidential transition of the Joe Biden administration, or shall we say the BlackRock administration? Because here it is, the BlackRock administration is poised to replace the Goldman Sachs administration in the White House. And this is exactly what it is. All of you donkeys who think that being in Team Red and Team Blue, voting Trump out will solve everything, that now we have Biden. It doesn't work that way. It is a big club and you and me are not in it. At the end of the day, there is no Republicans or Democrats or anything like that. At the end of the day, we are ruled by the BlackRocks of the world, the Vanguards of the world, the Goldman Sachs of the world, and now we're transitioning from Goldman to BlackRock. So set that as a reminder next year when you celebrate the 4th of July. And speaking of Goldman Sachs analysts upgraded NEO today. And what do you know? NEO's down 10%. If you are a new follower for this channel, remember the rule that I give to my followers. When Goldman says buy, you sell. When Goldman says sell, you buy. It works like a charm. Do the opposite of what Goldman Sachs says and you'll be just fine. I mean, after all, they got voted out of the White House. That's for a reason, because they suck. And now that we have the BlackRock administration, hopefully they will solve all of our problems. And let's shift to the market sentiment and see what's going on with the mania and the bubble that we are in. Here is a genius by the name Robert Chiller, and it is Chiller for a reason, because he says that the sky-high stock prices make sense. It makes sense if you are a chiller. Moving on. And here is the small caps Russell 2000 had its best month ever, 18.3% in a single month. When was the last time we saw those kind of gains? Oh, it is February 2000 when the Russell surged 16.4%. I don't mean to spoil the party, but go back and see what happened in March 2000. Moving on to the Robin Hoodiots. And let's see what's going on with the Robin Hoodiots. Now, let me clarify one thing for new subscribers. When I say the Robin Hoodiots, I am not insulting you or Robinhood or any Robinhood user. I use Robinhood myself. The Robin Hoodiot is a state of mind. It is a mentality. And the Robin Hoodiots, if you don't know them, listen to this story because it is a very clear example of what a Robin Hoodiot is. Here is the headline. He turned 5,000 into nearly $500,000 with the help of Tesla options. Now he's all in on just 2 stocks. And MarketWatch is presenting this article as somehow a investment advice when it's supposed to be under the casino section. And let's see what this guy did. He gambled on Tesla options, buying calls after calls after calls. What do you know? His account moved all the way to over $300,000. Now, after this streak of luck, what happens rationally? You take your chips off the table and you move the hell out of the casino to keep your profits, your quote-unquote gains, bro. But this is not how the Robin Hoodiots think. They're gambling addicts. That's what they are. And here's what he says. Next stop, bro, is 1 million by year end. His journey began about a month ago. Talk about luck. According to a series of posts, he's of course posting online. And here are the 2 stocks he's going all in to make $1 million by the end of the year. Apple, and AMD. Now, I want you to say a prayer for our friend here, the Robin Hood idiot, whatever his name is, because he will end up losing all of his money. Guaranteed. I'm willing to bet on it. Because remember the story a few months ago, we're not talking about, the dot-com bubble or Qualcomm or 1990. No. We're talking about a few months ago. The story of the Robin Hood idiot who turned $15,000 into $1 million and then lost it all in a week. Old viewers of this channel know my career experience. I worked in the casino industry primarily as a financial analyst, and I was involved during the debt restructuring, the very famous Las Vegas debt restructuring after the financial crisis. But before I've risen through the ranks, I used to work the floor of the casino. And when you do that, you learn a lot about human psychology, specifically the gambling psychology. And at the beginning, when I see a player has a hot streak of luck, they turn 10 grand, 100 grand, sometimes $1 million. You see amazing things in the casino. And then they come back the next day to gamble a little more. And I will feel a little bit of empathy here because the odds of the game are stacked against you, meaning that you only won because of luck. When that happens, you take your money, you walk away, and you never come back. But this is not how it works. I used to have empathy and I would tell him, hey, bro, you sure you want to play another one? You already made a lot of money. You sure you want to play it? Oh yeah, I know. It turned 10 grand into 100 grand. But bro, I'm going to turn it to 250 and that's it. What happens? They lose it all. And as the time went by, I started to lose empathy and respect for gamblers. Because the gambler's journey always ends with losing everything. They don't stop until they lose everything. That is just basic gambling psychology 101. And they're doing the same thing in the options market. If you are a trader, quote unquote trader, remember that 99% of traders end up losing all of their money because they are in fact gamblers, not traders. Traders have principles, rules, and they follow them precisely. They're not looking for short-term gains, big gains, turning 5 grand into $1 million. Doesn't work that way. They have specific, precise goals. And these are the guys and gals who last in the game for the long term. With no discipline, you will end up being one of the 99.9% of gamblers who get smoked out the stock market. Moving on to the heat map analysis. What do we see today? The picture is green across the board with few exceptions. The notable winner here is Apple, up another 3% or so, building on the gains from yesterday. Before the week even started, we talked about the potential of Apple outperforming this week. All you needed to do is a little bit of understanding of psychology to know that Apple will outperform this week. And indeed, so far, it is outperforming even the rest of big tech. Microsoft, Google, Amazon, Facebook, all in the green. Facebook closing over 3%. But remember, for the week so far, Apple is outperforming Facebook. But we are seeing an uptick in options activities for Facebook. So perhaps we will see Facebook picking up on the gains from today. What do we see in the tech sector? Big day for Taiwan. I explained to you the options market activities for TSM. Another big day for Intel, Qualcomm. Nvidia remains the weaker name here. I'm glad I corrected my error because remember I shorted TSM initially. I wanted to short in semiconductors and I shorted TSM and then I changed my mind and shorted Nvidia instead. And I'm glad I did that because if I held to TSM short, I would have been killed already. Big day for AMAT and Lam Research. However, we see weakness here with the software names. Square, another down day. Remember that Jack Dorsey dumped a bunch of shares and perhaps more Square insiders are dumping as well. Okta down over 3%. Zscaler down over 2%. CrowdStrike down over 3%. DocuSign over 5%. Datadog over 3%. And even Trade Desk down a little over 1%. You see the picture here? The notable decliner, of course, among the software names. CRM down another 1.8% and more after the bell because they reported earnings and they confirmed that they are buying Slack. Last time I checked, the name is down an additional 4% or so. Communication services, the big winner is Facebook, obviously, but we see Netflix outperforming today, and the hot streak for broadcasting continues. Discovery up another 3% or so, Liberty another 3%, but we see Spotify taking a break, and the notable decliner in the communication services sector is Zoom, down big over 15% after they reported earnings yesterday. What's going on with consumer cyclicals? Green picture across the board with few exceptions. Wayfair down almost 2.5%. We're seeing weakness here in Wayfair, very notable, but I do think that Wayfair will start to catch a bid very soon. Just like we saw with Apple, underperforming, consolidating, and boom, you see an uptick in options activities, and you'll probably see Wayfair popping higher again. The reopening trade, casinos, cruises, travel names, hotels, even apparel, all closing in the green, with few exceptions, but all in all, you see names like TJ Maxx, Ross Stores, Marriott, another 1%, mixed picture for cruises, but casinos, you see Las Vegas Sands up over 1.5% for the day. Auto manufacturers, big day for Tesla, Honda, General Motors, Toyota, but NIO is the underperformer here, down over 10%. And the notable sector in the declines here for consumer cyclicals is residential. Lennar, down almost 3.5%, DR Horton, over 3%. We saw weakness in the housing data yesterday, and you see a follow-up in the stocks today. What's going on with consumer defensive? Strong performance for the day. The notable underperformer is Unilever, down over 2%, but we see Cisco up over 3%. Cisco been lagging because Nelson Peltz dumped hundreds of millions worth of Cisco shares the last few weeks, but it is back to being a hot name again. Tyson, another day of gains, over 2%. Good day for beers, Mondelez, tobacco names, Costco, Coca-Cola, all closing in the green. The laggards here, in addition to Unilever, you can say Walmart and Target closing slightly in the red. What's going on with REITs? Green day for REITs. American Tower in the green, even Simon Properties bouncing back, closing up almost 3%. Mortgage REITs, healthcare REITs, all closing in the green. Utilities, what's going on here? The notable gainer, of course, is Dominion Energy, up over 2%. And we talked about Dominion. We have an options trade, a call options trade, and it worked significantly today. These options more than doubled in value for Dominion Energy. Basic materials, the winner of the day. Massive day for the ticker VALE, the Brazilian miner, continues on a tear, massive tear, and you see significant uptick in the options market activities for this particular name. Alcoa up big today. We talked about a put options trade yesterday. Today we're getting served a hot pie on the face. Alcoa up big for the day. Copper, Freeport-McMoRan also up 1%. But the notable outperformer is gold miners. You saw gold futures trading in the green today. Barrick Gold, Newmount, all closing in the green significantly. Energy, mixed picture. You see Exxon, Chevron lagging the day, while BP and Royal Dutch outperforming. The laggard of the day and the underperformer is Oxy, Occidental Petroleum. Remember yesterday we had a put option trade against Occidental Petroleum, and the name is down over 4% today. What's going on here with industrials? Muted day, airlines gaining. However, the rest of the sector muted, and the notable underperformers are Deere, down almost 2.5%, Rockwell Automotion, down over 3%, and UPS, down almost 2%. Meanwhile, FedEx closing in the green. What's going on with healthcare? Of course, the notable action happened in Moderna. Moderna opened up big in the green, finishing the day down over 7%. But we do see big pharma names, Pfizer, Johnson & Johnson, Amgen, Merck, all closing in the green. The notable outperformers for the day in the healthcare sector are diagnostics. We're talking about Illumina. We're talking about Dexcom. All of these names got whacked really hard the last few weeks, and this week it appears to be a bounce week for these names. Moving on to financials. Big day for big banks. Rebound day for regional banks. And by the way, if you watch the charts overnight, the first thing when I do when I wake up is looking at the charts that developed overnight. And right away, you would have noticed the pump in yields right before the European market opened. Somebody decided to dump a bunch of bonds to prop up yields. And we see an outperformance here for regional banks, but we see big day for BlackRock, the new administration, Morgan Stanley, Charles Schwab. However, muted day for credit services, MasterCard, Visa, Amex, all closing in the green, but lagging the rest of the financial sector. What's going on in the rotation trade? Check this one out. They're both winners. No losers here because it is a passive investment pump kind of day. We're talking about the BlackRocks of the world, Vanguards of the world, in coordination with the Fed, of course, pumping the market overnight. They're buying everything. They're buying the SPY, the Qs, all the indices. They're not buying individual names technically, and therefore you see the quote-unquote tide that lifts all boats kind of effect for the day. The notable laggards, we talked about Zoom in the momentum names, Peloton, DocuSign. All of these hot names are starting to look very weak. What is the thesis here to buy Zoom at these levels? There is no thesis. They're slowing down. They're overvalued. It is time to take profits. And right away, across the aisle for the comeback stocks, the underperformance is from Emerson, just slightly, and Royal Caribbean lagging the rest of cruises. Moving on to the charts analysis. And what do we have today? 15 minutes chart of the SPY. You guessed it. It is a gap up day. But look at the difference from the first candle of the day and the last candle of the day. Flat. We did not do anything during the day. Retail is not picking the pump. They're already in. Who's going to buy the market here? The passive investment funds, they could pump overnight over and over again, but they've already pumped over 80 billion bucks in the last few weeks. Are they just going to continue to pour money knowing that there is no pickup from retail? That is doubtful. And we are not covering a daily chart because there is no development here. The SPY pretty much closing all-time highs, and the sky is the limit. If we continue to pump overnight, the market can continue to go higher and higher and higher until we see a signal of a reversal. But I have a theory here, and wait for it for the conclusion of the video. Moving on to the Qs, 15 minutes perspective. Similar story here, a gap higher in the morning. However, we see that retail picking up the steam a little bit, and you saw the Qs all in all for the day closing in the green. Moving on to the Dixie. Here's a daily chart, and the Dixie getting whacked severely today, and you saw the effect on metals and some of the dollar sensitive names. Now, why do I keep saying that I have a feeling that the Dixie will pull a final act before reversing lower for the long term? The reason is we do have a significant amount of dollar shorts. Matter of fact, it is a record high in dollar shorts when everybody has the consensus that the dollar is going to collapse and they hop in shorting the name. Any surprise that pierces a hole in this narrative, you will see a significant activities of short covering in the dollar, and that could surge the dollar to stratospheric levels. So I still think that there is a final act for the dollar index. When will that happen? It is anybody's guess. But if it doesn't happen by the end of this month, then the dollar will continue the journey to the downside for the long term. What happened with gold today? You see, finally, the reversal that I've been anticipating before the week even started. I told you that gold will reverse this week. There's a good chance of a reversal. We saw it today, gold trading up big in the green. And of course, we want to see a follow-up and a confirmation tomorrow. Bitcoin showing weakness today, gold catching a bit. What's going on with the TNX, the 10 years treasury yield? Remember yesterday I was talking about a scenario of a flush down in yields? Well, instead I got a hot pie on the face today because somebody decided to dump a significant amount of bonds overnight, sending the 10 years treasury yields higher. The flush down happened to the upside. And now the question is, are they going to follow up and go all the way to 1%? Or is this a fake out and they're going to continue the resumption to the downside tomorrow? The answer relies on whether retail picks up the market rally or not. If we see exhaustion, meaning the retail is not picking up, passive funds will hold their horses and stop the flow of funds to the market. That would send yields lower because the thinking will be that the market is not ready to be bought yet and we need to shift back some of the funds to bonds instead until the market reaches an attractive level for retail participation once again. Here is the TLT 15 minutes chart, another gap lower, significant one. I told you about what happened overnight. Here is the results. They dumped bonds in a significant amount overnight and the TLT heading lower. What's going on with the VIX? The VIX closing in the green. Can you imagine that? The market closing in the green, the VIX also closing in the green. I know everybody's betting against the VIX. It's going to collapse. And once it pierces 20, below 20, you're going to see the automatic flow of funds to the indices. I'm willing to take the risk here and say that the VIX will explode higher before it pierces 20, meaning that we have another rally left for the VIX before we pierce below 20. That's my take. That is my opinion. I'm willing to stand behind it. And here is the chart of Apple. What do you know? When passive funds flow into the market, they buy ETFs, they buy the indices. What is the biggest name in these ETFs? It is Apple. Combine that with the activities in the options market, and you have a perfect formula for Apple to rally. What happened today? Gapping higher, going all the way to retest the level of 120, a very important level of 120, catching support, never looking back, and closing way higher at 122.66. Is this bullish behavior? Yes, it is, 110%. Can the market collapse and crash when Apple is rallying? No, because Apple is the king of the Nasdaq. Without Apple reversing and closing below 120 significant rejection, it will not happen. And this is why we continue to watch Apple's chart. What's going on to the other important momentum name? Tesla. Tesla showing a little bit of weakness here and an exhaustion. You see that the Tesla table at the casino is not as hot as it used to. And if we continue to see a rally in AMD and Apple and other names, they will take some profits off the table from Tesla and rotate them to the new hot names, meaning that we are getting very close for a good opportunity to buy some put options for Tesla, betting on a decline all the way to retest the trend line, the yellow trend line that you see right in front of you. And here is a segment of charts that I call quote-unquote market functioning. Remember Jerome, when he flooded the market with a tsunami of liquidity, he said because he's interested in ensuring quote-unquote market functioning. Here is an example of market functioning. This is a monthly chart of Moderna. Check out the massive green candle, the impulsive green candle from November. Today is the first day of December and we are seeing a correction right away. But if this candle was to the downside, the Fed will rush to save the market and there's something wrong going on with the market. But when this candle happens to the upside, oh, it is just market functioning. And here is another one for quote-unquote market functioning. A chart of Trade Desk, the ticker TTD. Check out this candle. We are in the video game market. It is no longer a functional market. What do I do when I look at this chart? I'm not buying put options for this one. I'm shorting it directly. The probability and the odds are in my favor long term. We are probably not going to see these highs in Trade Desk for years to come. And here's another one for quote-unquote market functioning. The monthly chart of AMAT, Applied Materials. And this is an old school name that shouldn't be trading this way. But under the new normal of quote-unquote market functioning, look at this candle for November. What do you think going to happen next? A correction. A lot of bag holders. And when the bubble bursts, the pain will be felt in the real economy. This is the dangerous environment that the Fed has created. And lastly, let's check out on the trades we have, because I promised you I'm not going to open more trades, but I did anyways today. And the trade was for the XBI, the biotech ETF, when I bought puts. And here is the chart of the XBI. The entry price was 135 and the exit target is 126. In this case, I bought the 130 puts, expiration date December 18th, and I sold the 125 puts, same expiration date, for a debit spread. And the entry cost for this one is $1 per option. At least for me, that was the price. Meaning that if I am right and the XBI declines about 6% down to the target by December 18th, this trade could result in 500% profit. And here is the last chart I want to show you for GameStop. I did not enter this one. I have no interest whatsoever. But we talked about the entry price of $17. GameStop declining once again today, showing weakness. And if you are going to enter this one, make sure you make it a little longer than you think. Meaning, if you're going to buy December, buy January instead to give yourself a little more time, because these zombie morons, Robinhood idiots, they're going to see the decline as an opportunity to stampede once again. And let's move on to conclude this video. Again, passive investing, pumping the market overnight with no retail participation during trading hours. Retail is all in and only interested in options gambling. Where does the market go from here? Can they do another pump this week, next week? Yes, they can. They can continue to flow the funds overnight into the equities market and ride it higher. Can retail at some point become a counter force and start selling their stocks and therefore undoing the effect of the passive funding overnight? It is possible, but again, remember, passive funds flowed over 80 billion in a matter of weeks. Retail doesn't have that much power. So again, the market making power relies on the hands of the BlackRocks, the Vanguards, Fidelity, etc. If they continue to see lack of participation from retail, they're going to have to pause the funds flow for now and wait for a better entry price, aka a correction. This is why we continue to watch Apple, we continue to watch the TLT and the VIX, because these three will tell you right away whether passive funds are stopping the flow or not. And here's what I want you to think about. Here was a tweet saying that the CBOE put-to-call ratio reached all-time low, meaning that retail and investors, institutional investors, even the professionals are not interested in protection whatsoever. They don't think that this market will go down at all, meaning that the premiums for protection and puts are very, very cheap. And I do like a bargain. So what do you do now? While everybody's busy celebrating new highs in the market, you start to build your shorts. Let's say for February next year, and if I'm playing the con game of Tom Lee, I would just look at past probabilities and predict that the market will crash in February. So personally, I see that the declines in the put-to-call ratio, we're talking all-time lows. Combine that with the fear and greed index at historic highs, the highest read for the year. You combine this information and you cannot help yourself but to come to the conclusion that the rug will be pulled imminently. What do we have tomorrow? We have the Fed's Beige Book. Now, when the Fed and Jerome talk in an alarmist tone, the market likes that because the market is a cocaine addict. The market is in the upside down world. Good news is good news, but bad news is even better news. So if the Fed changes the tone tomorrow and say, oh, we're seeing some signs of recovery and we're starting to climb back to normal, the market is not going to like that, because the market will assume that the monetary and the fiscal support will diminish. Again, it's a cocaine addict market. During bad times, the market rally because the Fed and the fiscal government will continue the flow of liquidity, aka the cocaine. Every analyst you hear from says that 2021 will be a very good year for the economy because of the vaccine and we're going to come back. Here is what I see. The market will crash during good times economically. Everybody will be baffled. Wait a minute. When we had the coronavirus crisis and everything was bad news around us, the market was rallying to all-time highs every single day. And now that we have good news in the economy, job recoveries, etc., all of a sudden the market is trading lower. And the answer is because the likelihood of more cocaine to the market is diminished by good news. So the tone from the Beige Book will be very, very important. I know Jerome wants to play a game while he balances things, meaning combine some alarmist tone to encourage the federal government to issue a new stimulus. In the meantime, grooming and preparing the market for the end of the lending facilities and the cocaine by showing and talking about some signs of recovery and improvement in the real economy. That is my prediction for the Beige Book tomorrow. But we will see what happens, and I'll talk to you again after the bell tomorrow. If you found the information presented in this video helpful, please subscribe, press the like button, the notification button, and follow me on social media.